the algorithm will look back 60 days and it'll find, it's very easy. If you know anything about computer programming, and you don't even have to do that, but just look at this 1st of November. If you look back 60 days in the past, what was the highest high in the last 60 days? There's going to be buy stops above that high. What's the lowest low in the last 60 days? There's going to be sell stops below that low. In the last 40 days, what was the last highest high and what was the last lowest low? Looking back in the range to the left from that November red line that we're delineating on November, where are the stops below and above those highs inside of the range of 20 days, 40 days, and 60 days? Now, I already know what some of you are thinking. Well, what happens if there's a low that's really, really obvious that's just outside the range of 60 days? That's the farthest extreme. That's when the open float will move aggressively and go outside that normal parameter of 60 days, and you'll see that big run. The market will jump and skip right down into that old low that's just outside that 60-day range. How do you know when it's going to be an explosive move, Michael? When you have that scenario. If in the last 60 days, if they've already ran out the stops below and low in the last 60 days, or above an old high in the last 60 days, and there is a larger, higher high or lower low where the stops will be resting above or below respectively, then you know there's going to be a big run on price and they're going to run for that liquidity because that's the only other thing that's left. The large funds have their orders above and below these old highs and lows.